Hi, I'm Michael Andersen, and I'd like to talk with you for a few minutes about what's going on in Washington, D.C. and how it relates potentially to the stock market. The topic of discussion in Washington these days is, of course, corporate tax cuts, whether or not corporate taxes are going to be cut. Well, I don't know what's going to happen, but I think it could be significant, and here's why. So the stock market's gone up a lot the last year or so, almost in defiance of logic. But one thing out there could justify the current levels where stocks are, and that is if corporate taxes are reduced. See, here's what they're talking about in D.C. If corporate taxes get reduced, the corporations therefore make more money. And that's significant because one of the most common metrics for valuing stocks is something called a price-to-earnings ratio. Well, if there are more earnings, then the price-to-earnings ratio, instead of being sky high, may actually be closer to average. Now, there's a funny thing about Washington, D.C., as we know all too well here in Maryland. The Congress has an uncanny ability to snatch defeat from the jaws of victory, and you never know what they're going to do. So here's what I think we should do. Let's not base our hopes on the certainty that Congress will cut corporate taxes. Let's be prudent and cautious, as we always should be with our retirement finances, just in case things don't turn out the way we hope.
Money Insider is sponsored by Andersen Wealth Management.